In today's video, we're talking about a little-known company worth billions, that most people have never heard of, and most never will. This is the fascinating world of high-frequency trading. This company was dominating the industry, as the world's largest electronic market maker for 20 years. After making hundreds of millions in market returns annually, one fatal mistake by a technician destroyed the company's entire legacy. An innocent mistake caused the company's trading system to deplete the company's entire billion-dollar balance sheet in minutes. In an instant, that giant on Wall Street was reduced to the laughingstock of high-frequency traders. We're talking about none other than Knight Capital. Knight Capital was founded in 1995 in New Jersey, near New York City. They engage in electronic market making, electronic execution, and institutional trading. In other words, they engage in the same type of business as Citadel Securities, providing bids and offers on public stock exchanges for other market participants to trade with. As a market maker, they were what's called a liquidity provider, which means that these two grades, either buy or sell, it's not but almost the same price, and no matter how important it's worth. Whenever another market participant comes to the market wanting to buy or sell a stock, they frequently end up trading with electronic market makers like Knight Capital. That's because these market makers are almost always able to offer price to buy and a price to sell the security. However, the prices they offer are perfectly fair, and this primitive demand from market takers adds up to hundreds of billions of dollars in profits each year. Knight Capital also engaged in specifically trading with retail traders in payment for order flows. How rage brings in these arrangements. Knight Capital Trading, along with other electronic market majors, systematically trade against incoming retail trader orders. Often the prices for execution of their orders they're slightly but not much better than existing markets. This was a continuous controversial and lucrative business, especially during times of market volatility in the late 2000s. Knight Capital was the largest trader of US stocks, did nearly 20% market share and market making on both the New York Stock Exchange and the Nasdaq Exchange at their peak. They had multiple offices in New York, London, Singapore, Hong Kong, and many other places. They were actually one of the few publicly traded market maker companies. That's how we know how much money they make, which is usually in the hundreds of millions of dollars in profit, mostly in that year late last $750 million for investors, equals a massive market cap. Revenues went from $630 million in 2011 to only $50 million. I agree with you, trading is known to be a cyclical business, but this magnitude of a trading loss over the course of the year was unprecedented. And it was all caused by one little mistake made by a technician. The technician at Knight Capital was copying a new piece of trading software. It's 8 different servers that included Knight's trading strategy. The general purpose of these 8 servers was called Retail Liquidity Program, and it was in charge of deciding what happens to retail brokerage orders. There are many different ways that electronic market makers can handle retail order flow. For instance, they can decide to trade against providing a better price or equal to the current best market price, or they can send it to one of several different exchange trading routes. The Retail Liquidity Program is a trading system that they use to decide which of these routes retail orders are sent to you in real time. On August 1, 2012, the technician for Knight was upgraded to Retail. We pre-programmed logic for Knight Capital on a service that it was running on. However, he somehow missed one of the servers and it went through using the old computer code. This may not have caused any problems, but in this case did change the functionality of a crucial part of code called PowerPay. It was a system that put us in trades in the market, in order to verify that dates trading algorithms were working properly. However, the new trading system that Knight Capital rolled out used the same flag that our peg was set to mean that our peg was triggered at random times during live trading when it wasn't supposed to be. The next day, When Knight Capital's trading systems were online, the issue was triggered millions and millions of times. The outcome was ordered in stock order executions in 154 different stocks, amounting to nearly 400 million shares traded. The mistake was noticed in 45 minutes, and trading systems were frozen. But it was not before those 400 million shares had traded and incurred substantial trading losses. Knight's trading systems caused a major disruption to the New York Stock Exchange stock that it was trading. Obviously, such an uncontrolled trading frenzy was not profitable. Knight Capital and other high-frequency traders were surely taking off Knight Capital's position the whole time. In the end, the trading company's losses amounted to a staggering $440 billion. And that massive loss was in only 45 minutes of trading. At the time, Knight Capital had a market cap of about $1.5 billion. So the $440 million loss was roughly equivalent to 4 to 5 years of Knight's entire company profits. There was no way that a company could bounce back from such a devastating loss within a day. Knight Capital's stock price plunged by 75%, literally overnight. Knight Capital had gone from being one of the world's most successful high-frequency traders to having CEOs scrambling for emergency equipment just to keep the company afloat. It was a devastating blow. 4 days later, Knight's bank was able to raise $400 million from several investors to try to save the economy. As part of the fundraising, the investment being Jefferies paid $125 million to become the company's biggest shareholder. In addition, several other smaller creditors took advantage of Knight's positions by diluting shares in the company. It was a supremely embarrassing time for the CEO. Thomas Joyce had been an outspoken critic of how the market handled Facebook's messy IPO. But his own trading company suffered possibly the most costly technological mistake in trading history. He himself became the very face of embarrassment. In December of the same year, Knight Capital was acquired by CO LLC in emergent to a new company called KCG UCO LLC to talk to the trading infrastructure and operations of Knight Capital Group and became one of the largest market makers in the world. 4 years after that, TCG Group itself was acquired by Herta Financial. Hit another market-making company. Routine Financial is to this day one of the biggest market makers in the world. It has operations in 36 countries, trading over 25,000 different securities, is much bigger than Knight Capital Group, was making more than $1 billion of net profit in recent years. But one thing is for certain, they have not tried to retain any image of the legacy of Knight Capital, display how much of their operations may be left over from the company. Many other trading firms like Capital have since also acceded to the industry. Electronic trading and market-making industry is extremely competitive. And there's been a huge amount of consolidation. For example, the Chicago Mercantile Exchange lists a small group of 9 market makers through a high-volume even equity index options. These include options on things like the S&P 500 index. With the ability for stronger companies with edge to push out less efficient competitors, maybe market makers have exited the industry. In another 10 years, there may be only 2 or 3 market makers gloves, whatever the case may be. The story of Knight Capital Group will forever be the most embarrassing and entertaining legacy of one of the biggest market makers that went out of business. So there you have it. Thank you for listening, and click on our next video for even more interesting economic and financial insight. Watch all of our videos, we take pride in bringing you the very best. You may not agree with me completely, so let me know in the comments. I am Mr. Smart Money, reminding you to stay smart with your money and to be excellent to each other. Watch our next video right now. I will see you in our next video.